Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of finance by digging into the actual documents companies file with the government. Today we're dissecting IES Holdings Inc.'s latest quarterly report, and let me tell you, there's a lot going on under the hood with this one. Get ready for some big numbers and some interesting strategic moves. So IES Holdings, they're in the business of installing electrical and technology systems and providing infrastructure products. Think data centers, homes, and big industrial buildings. They've got four main business areas: communications, residential, infrastructure solutions, and commercial and industrial. Let's dive right into the financials. Look at this balance sheet. As of June 30, 2025, their total assets are a hefty $1.47 billion. That's up significantly from $1.24 billion last September. A big chunk of that increase comes from property and equipment, which shot up to $64 million from $34 million, and investments also jumped from $0 to $44.9 million. This tells us they're investing heavily in their physical operations and making strategic investments. On the flip side, their total liabilities also went up from $591 million to $647 million. They did take on some long-term debt of $20 million, which is new. So more assets, but also more debt, a pretty standard trade-off for companies looking to grow. Now let's talk about how much money they're actually making. For the 3 months ending June 30, 2025, they brought in $890 million in revenue. That's a solid 15.8% increase from the same period last year. And for the 9 months ending June 30, 2025, revenue was $2,000 billion, up a massive 17.3%. This shows that their business is really booming across the board. More importantly, their net income attributable to IES Holdings Inc. shareholders for that same 9-month period was $2,000 billion, up a massive 17.3%. This shows that their business is really booming across the board. More importantly, their net income attributable to IES Holdings Inc. shareholders for that same 9-month period was $2,025 million in the prior year. This means they're not just selling more, they're also keeping more of that money as profit. Let's break down that revenue by segment. The communications segment, which mainly serves data centers, really stole the show. Revenues there jumped 55.6% to nearly $300 million for the quarter. That's huge and shows the incredible demand in the data center space. The infrastructure solutions segment also saw strong growth, up 26.9%. However, the residential segment saw a slight revenue dip of 8.3%. This is likely due to higher mortgage rates making new homes less affordable for people. Residential business numbers are down, but the other segments are really compensating for it, six of nearly $300 million for the quarter. That's huge and shows the incredible demand in the data center space. The infrastructure solutions segment also saw strong growth, up 26.9%. However, the residential segment saw a slight revenue dip of 8.3%. This is likely due to higher mortgage rates making new homes less affordable for people. Residential business numbers are down, but the other segments are really compensating for it. Looking at the 9-month numbers, it's a similar story. Communications revenue is up a remarkable 44.7%. Infrastructure solutions is also up 47.6%. Residential revenue is down 4.7%. The company's strategy seems to be heavily leaning into the data center and infrastructure boom, which is clearly paying off big time. Now let's look at profitability. Their overall gross profit margin in the most recent quarter was 26.9%, a nice improvement from 25.3% last year. This means that for every dollar of revenue, about 27 cents is left after covering the direct costs of providing the services. That improvement really shows up in the bottom line. The communications segment saw its gross margin improved a bit to 28.3% to 24.4%. That's a really positive sign that they're managing costs well and benefiting from strong demand. The infrastructure solutions segment also saw a fantastic jump in gross margin from 30% to 35.6%. This suggests they're really maximizing their efficiency and pricing power in those areas. The residential segment's gross margin actually improved a bit to 28.6%. This suggests they're really maximizing their efficiency and pricing power in those areas. The residential segment's gross margin actually improved a bit to 28.1% even with lower revenues, which tells us they are being very disciplined with costs despite the market headwinds. Selling, general and administrative expenses, or SG&A, were up about 21.6% for the quarter. This makes sense because with revenues growing so much, they likely had to add more people and resources to support that growth. As a percentage of revenue, SG&A actually stayed pretty stable at around 14.3%. That means their overhead costs are growing roughly in line with their sales, which is a good sign of efficiency. Now let's touch on their equity. Total stockholders' equity at the end of June 2025 was about $781 million. That's a big increase from $611 million at the end of September 2024. This increase is largely due to that strong net income they've been generating and also some activity around stock repurchases and compensation plans. Looking at cash flow, the company is generating a good amount of cash from its operations. For the 9 months ended June 30, 2025, they brought in $15.4 million in operating cash flow, an increase from $141 million in the prior year. However, they did use a bit more cash in investing activities this period, spending $14 million compared to $96 million last year. A good chunk of that was for capital expenditures like buying new equipment to keep up with demand, and also some strategic investments like their stake in Jet Texas company. Financially, IES seems to be in a strong position. They recently amended their credit agreement, increasing their borrowing capacity to $300 million and extending the maturity date. This gives them more flexibility to fund their operations and growth. They are currently in compliance with their financial covenants, which is always good to see. Now let's talk about risk. The company faces a lot of the usual business risks like economic downturns, inflation, competition, and labor availability. They are particularly exposed to fluctuations in commodity prices like copper and aluminum. They also mentioned that if their controlling shareholder, which is Tontine Associates, sells a large chunk of its stock, it could trigger some major changes in their agreements. This is a pretty standard disclosure when a company has a controlling shareholder. They also mentioned that a 10% change in the market value of their investments could swing their pre-tax income by $6.7 million. That's a pretty significant swing and highlights the risk associated with their investment portfolio. One interesting risk factor they highlight is how having a single exclusive forum for certain legal actions in Delaware could make it harder for shareholders to bring claims. This is pretty common for companies incorporated in Delaware. They also have a stock repurchase program in place, buying back 3,900 shares in the most recent quarter. This indicates they believe their stock is undervalued and is a way to return value to shareholders. So what's the story here? IES Holdings is clearly riding a wave of demand, especially in the communications sector, driven by data centers. Their strategy of investing in growth and expanding their service offerings seems to be paying off handsomely with significant increases in revenue and profit. The residential segment is facing headwinds, but the strength in other areas is more than compensating. They've also secured more financial firepower with their credit facility and are actively managing their investments and stock repurchases. The risks are there, as with any company, but they appear to be navigating them effectively. The big increase in capital expenditures suggests they're really betting on continued growth. What's your take on these numbers for IES Holdings? Do you think their focus on data centers and infrastructure is a solid bet for the future? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a like and subscribe for more corporate deep dives. We've also got a fantastic Discord community where we talk all things finance. Check it out in the description. Thanks for watching, and we'll see you in the next one.